here we go. We have what we call the FAZ, which is what? The financial bear. Now, this is the month of October, and because everybody thinks that the banks are going to be okay worldwide, we don't think so. We're buyers on the bottom. The high here, it hit a high. The bear hit a high of $80 in the month of October. And today is 10/20/2011. I'm going to draw some trend lines here. You can clearly see right here, and we'll look at the option tables. Here's the body, there's the wick, the highs, here's the low to a 10-month moving average and a 20-month moving average. We got support down here. We can see at times when there's problem and a lot of austerity that these things break all the way up here on the financial bear. And lately, because everybody thinks that there's this big cure coming out of Europe, and Europe is going to provide this big thing and bail out the whole world, and bail out the euro, and bail out the 17 countries, and bail out Spain, bail out who else? Italy and Greece, who is rioting in the street. And the banking sector worldwide is in a mess. And the Frank Dodd bill and all of those things are a big handicap on the financials these days. Yes, the financials had a rally at times, but they seem to run right back down at times. And we're just pointing out what the FAZ is. Here it is, the financial bear, and the low is 49.15 and the high is 52.80. These are longer term structured plays that we do. And if we have any problem over the weekend and there is no meeting on Sunday, and you wake up Monday, you see the futures down 200 points, these things are going to go skyrocketing. These are the kind of positions that we look at for long term. And what is long term? I can tell you, about 90 days out going into the new calendar year would be just about right, MMTs. And one of the things that we're clearly going to show for the MMTs is exactly what the low is and what the high is. The high was right here. The high was 81.20. So that meant that bear went up to 81.20, and then when things thought they were going to be okay, they brought it all the way back down to the low. Calendar monthly low is 46.87, and we're slightly off of those lows right now, printing right around 50. And you can see how this thing is, and this can be traded intraday. What we're looking at here to go along with the FAZ is that you can see where the call is. Now, if the FAZ bear financial goes higher, then the call would go higher above the money. We can clearly see that up and out of the money, this is a $70 call. That was on the highs over here at 29.10. Currently pulling back to 5.82 on the low. Over here, back in July, you could have bought them for $2.48 and shot right up here in 4 weeks. If you had a monthly call option, then you would have went straight up here to $28. What a great gain. Only about a $26 gain. However, they've taken the premium back down here toward the bottom in today's low. Today's low is exactly for the weekly. The weekly low is 582 and the weekly high is 980. And this is a call on the bear in the financials. Having said that, there's the call contract. Here is the monthly chart. I'm sorry, IBM got put in there. The monthly chart right here is where we look at buying up and out of the money. Why are we looking at the $70 one? Because once the contagion, if it hits, and when it does hit, is that it hits and it runs hard on the FAZ. And here is the monthly ranges on it with 15 million shares. Obviously, people are moving into this ahead of tomorrow, Friday, ahead of the weekend for the Germans and the French to get together about their big bailouts. Is it going to be enough? No, it's not. No, it's not. And this particular call option is a 90-day call option. at a very lower premium price. The call option is down here. They're buyable. Yes, there's still a little risk, but at least they've pulled back from the highs here, once again, of $29 to the weekly low of $5.82. This is the call that expires in January 2012. There is plenty of time to be buying down here on a very small amount and then even adding some down here, because nothing has changed in the financial banking system whatsoever. And of course, one thing that the MMTs are taught is how to buy where the risk is lower. That's the call for January, $70 call up and out of the money. This is the monthly range of the bear, financial bear, and it's been breaking out and continues to break out, and people are moving in off of the lows. There's the high of the day. People are buying the dips on the financial bear FAZ.